Hey, what's up, guys? It's me, Juan Pablo from 100% Finance at 100%finance.com, baby. Mr. Lifestyle Creator, the people's mentor, Mr. Cash Flow Passive Income. I got what you need to succeed. Thank you guys for tuning in. I greatly appreciate all you guys' viewership. When I say all you guys, I don't mean just YouTube, but I mean Periscope and I also mean Facebook. So welcome. I thank you guys for joining in this simulcast. All right. So topic of discussion for today. All right. It's about tap into the mindset of lenders, right? That's what it's all about. So let me give you the official title. The official title is pretty much how you can know the mindset of private lenders as well as banks, creditors, lenders in other words, so that you can get money from them. Because that is what is vitally important, okay? So I want to pose a question to you guys. By show of hands, and be honest for you guys on social media, by show of hands, how many of you like lending money to broke people? Huh? I didn't hear you. What'd you say? You say you do? Or you say you don't? Right? That's a tough question to answer. But some of you say, nah, that's an easy question, bro. You think I'm going to lend money to somebody broke? Because some of you guys have people in your family that never repay you back, always at a deficit, but always want to ask you for money. You might give that person money, don't get me wrong, but you do it for personal reasons, not for business reasons. If it was a business reason, would you like to lend money to a company that's failing? Or a business person that's failing? Let's be honest here. Many of you guys will say no. And there's reasons behind that. So if you were a lender, would you lend money to a person who's broke with bad credit? Great question, right? All right, so the point of the matter is this, guys. Banks, lenders, private lenders only like to lend money to individuals who look like they don't need it. Isn't that crazy? They like to lend money to folks who don't necessarily need the money, but they're borrowing the money for income producing reasons, for asset acquisition reasons. Not because they're in a deficit, not because they're in a hole, not because they can't pay their bills or their other financial obligations. They like to lend money to people who actually don't need it. Why? Because banks like to lend money to individuals who are suable. That's right, suable. And that's where your net worth comes into play. If you don't have a positive net worth or you're at a zero net worth, which is fine. Some of you guys have zero come out of college and some of you guys are negative because you have loans but no assets, which is perfectly fine. Banks are somewhat skeptical and lend you money. Why? Because they can't sue you and get their money back if worst case scenario, the deal goes south. It's that simple. So they want to make sure that individual has global income, multiple sources of income, because it minimizes the bank's risk of lending you money if you have more than one way to pay them back. So they might be thinking, well, if this deal goes south, let's say it's real estate, for example. Well, if this property goes south and they end up losing money, worst case scenario, Sarah can repay us back through her job or through her portfolio, through her stocks, her bonds, through her retirement account. Global, more than one source of income. So it's important to tap into the mindset of lenders. And guess what? I am a licensed mortgage broker. Do I practice it? No, because I'd rather do this, shooting videos, providing content, doing events, and coaching and investing in multifamily real estate is so much more enjoyable than me sitting down with a calculator and a pen, you know, in my hand doing mortgages. Nothing's wrong with that. I love mortgage lenders, don't get me wrong. But the reason why I became licensed is so I can tap into the mindsets of underwriters. So that when they see my application for a mortgage, or if I'm talking to an investor on a deal, I can tap into the mindset of an underwriter and use that as leverage. So they will never say no to any of the deals that I present. Okay, so it's important that you tap into the mindset of not just institutions, not just mortgage companies, but private money as well. If you're unfamiliar with private money is a term that we provide to people who lend money out their pockets. Simple and plain. They could be friends, family members, colleagues, or people in networking events that you reach out to, right? But you want to make sure that you're perceived as credible, okay? And if you're not perceived as credible because you're broke or you have bad credit, they will have reservations to lend to you. Now, I'm just being very frank. I'm not saying this to beat you down, because I was broke with bad credit too, dog. You ain't the only one. Everybody I know in my circle growing up was either broke and or had bad credit. That's just how it was. But I changed my circle though, and you can do it as well. All right, let's get back into it, right? So we did a poll, and I asked you personally, if you were a lender, would you like to lend money to a person who's broke, who needed to borrow money because they actually need it, they're desperate, and not because they want to reinvest it and grow their business? Because it's risky. When people are in desperate situations, you know how they say, desperate times call for desperate measures. And they might be desperate and not be able to repay you your capital. All right, so banks don't like to lend money to people who need it, and they like to lend money to people who are suable, right? Which is predicated by their net worth. But banks don't like to lend money to babies. What do I mean by that? Babies, meaning a startup that is not even seasoned, hasn't been incorporated for 2 years, or is not even incorporated at all. Because many people will say that to me all the time. You know, being on social media, as you can tell, I got multiple platforms. So having multiple platforms, I get multiple comments. And that's not including email and other ways in which I market and connect with society. Right? So being that I'm online, tons of people provide this argument. Hey, I heard somewhere my quote-unquote mentor or advisor or my own intellect told me that business and personal credit should be separate. You should not use a personal guarantee whatsoever to get business funded. And then I reply, who told you that? Huh? 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 Was that your mentor? Was that an advisor? Or did you think of that yourself? Whoever told you that, it really doesn't matter. What matters is this. If you were a lender, would you lend money to a brand new spanking business with no proven track record? Huh? Being able to keep your business separate from your personal credit, personal guarantee in other words, is ideal. But that's all theory. You might have heard that from a mentor or an advisor or from your own intellect, but has it been proven? Huh? More than likely, no. But it sounds good, doesn't it? It sounds good in theory. That's the difference between facts and theories. Did you or anyone who told you that actually applied and gained results? Huh? On a startup? Huh? Especially if you got quote-unquote challenge credit and no positive net worth? Huh? It's risky compared to banks. Banks are in the business of lending money. Private lenders are in the business of lending money. And they want to make sure they have a return on their investment. And they don't want to risk it. They don't want to risk their capital that they lend to you. You got to understand the mindset of lenders, banks, creditors, etc. All right? As a startup, it's perceived as a baby. That's why people say, oh, my business is a baby. Yeah, because it demands all of your attention, all of your time, and your physical presence. If you were subtracted from the business, that baby would die, just like in real life. If you weren't there to care for your baby, give it the attention and love that it needs, that baby, unfortunately, may not survive. Same thing with your business. So banks, they say, well, the business is not strong enough to stand on its own 2 feet. And it's predicated upon the business doesn't have full documentation, doesn't have tax returns, doesn't have a payday score of 80, it's not in compliance, it doesn't have any type of record in regard to the transactions, like $10,000 per month in their bank account or their merchant account. Don't even have a merchant account. No P&L statements. It's a baby. It has none of that stuff, none of that documentation, no full docs whatsoever. What bank will lend you money? And I'm saying this on behalf of a person, this guy, who's a real estate investor who's tried to get money without a personal guarantee, corporate credit in other words. And the people that I reached out to who say, yeah, you can get corporate credit, all of them want an exorbitant amount of upfront fees. All of them say, oh, you got to pay for this, this, and this, and this, 20 different things to be in compliance. Then they say I had to get 6 vendor lines of credit from Home Depot, from Quill, from Office Max, from Office Depot. About 6 different vendor lines of credit, meaning I can get credit and only use it for that specific vendor, like a department store. Had to do all these things, very costly, for months on end, about 6 months, until my payday score becomes an 80, which is similar to like a 720 on your FICO score. But then, in order to get $50,000, I had to wait a whole year. and 25,000 of that is unsecured, meaning the other 25, I can only use it at a department store for that particular vendor. That sucks. So I found a way, a process in which you can get funding using a personal guarantee, 30 days or less, no upfront fees, no risk. But it is predicated upon you having pretty credit. So even if you don't have pretty credit, I always advise for you to apply. Why? Because that's what I'm here for, the people's mentor, to provide you with the tools you need to succeed financially. And that tool is the advice, wisdom, the counsel from people who do this stuff on the regular. Even our processors own real estate for investment purposes, not for personal. Not saying, oh, even my processor for business credit owns his own house. I mean, that's cool too, but no, actively invest in real estate. That's why the company was formed, because that's what we do. We use creative financing to finance our deals. Okay? So don't spit on the name of using business funding with a personal guarantee. Many of you guys see my money team. I ain't going to pull them out now. I ain't going to show them out. But I have 23 in total. And those business credit cards with a personal guarantee bought my financial freedom. No longer have a 9 to 5, so I can live the lifestyle, baby. And guess what? All of them have a balance of zero. You're like, oh, they have a balance of zero? Yes, over $200,000 in funding off credit cards all have a balance of zero now. Because that's what we teach in the coaching program. Using business credit to get you in the door, and then use the equity and the cash flow and so forth from the property, we do refinances, using partnerships and so forth, to pull that equity out, that cash out refinance, and pay off those business credit cards. Or even using business income. If you're doing wholesaling, if you're doing flipping, you're using those proceeds to pay down the business funding as well. That's all business credit is for, just leverage. And if you got to use the personal guarantee, so be it. But just keep in mind, you use the personal guarantee to get one business credit card, and now one business credit card, because our average client gets $40,000 in funding, that one business credit card can equate to you obtaining a 10-unit apartment building. So why not have 10 tenants pay off that one credit card that you have? And not just pay off the credit card, but to pay the operating expenses as well as put money in your pocket as well. All right, so let's get back into this. So I just want to just tackle some of those misconceptions people have, you know, and tap to the mindsets of lenders. So private money don't like to lend money as well to inexperienced people. So some of you guys will say, all right, why are you going to use the banks? You know what, I'm going to tap into private money. I'm going to tap into family members, friends, and colleagues. Go to networking events and find someone who has money who will be willing to partner with me. I bring the time to the table, they bring the money to the table. Sounds like a deal, right? But question, would you like to lend money to someone who's inexperienced, same boat as you? You got the money, but they don't. So they can experiment with your money? Doesn't make sense, does it? Wouldn't you feel more confident if you had the money and they had the time, but they also had the expertise and experience to back it up? A success record, in other words. Wouldn't you feel more confident lending that person money? Of course you would. That's the same thing with private lenders. They want to see if you're credible. Because if y'all both are inexperienced, but one got money, the other doesn't, why wouldn't that just private money lender find someone who's experienced? So that's why I say work on your personal finances first. If your credit is challenged, that's fine. Apply for credit repair. Then apply for business funding. Use those two tools to acquire income producing assets that only YOU own. You incorporated, meaning you, no partners. Then once you have a proven track record, then once your credit's looking pretty, then once you have business funding, then it'll be easier for you to attract private money as well as business funding. You guys follow? If you got your credit looking pretty, you have a proven track record, you got assets, apartment buildings, single family homes, whatever it is, under your belt, then it'll be easier for you to attract private money, banks, business funding, seller financing, and the like. All right, so that's about it. So I want you guys to take some action, because you're not viewers, you're doers. So I want you to go ahead and move forward and apply for business funding. And if you don't qualify, that's fine. If you need credit repair, we also got your back. So apply for credit repair. We have ink removal service as well. So apply so that we can help you achieve a better financial situation. So I'm Juan Pablo. If you found value in this video, please share. I have an abundance mindset of sharing with you for free now. So I want you to share with your circle as well so they can benefit. As always, this is to your success. Earn passively, live passionately, and in a short matter of time, everybody and their mama wants to lend you money. You live in a world of abundance. Everybody wants to be on your team. Alright, I wish you much success. God loves you. Peace. Thanks for watching the video. We appreciate your viewership. By the way, guys, make sure you subscribe to 100percentfinance.com. We have a plethora of tools that can help you succeed financially. We have a report on credit repair, 3 tips on how you can improve your FICO score. We also have a business credit ebook. We have a ton of real estate related documents, from deal analyzers to a mortgage calculator, a whole bunch of resources. You just have to subscribe. And one last thing, don't want to forget, we are offering free live webinars to answer your questions. This is only made available to our website subscribers. So you have to subscribe to 100percentfinance.com to receive the details as to the date, the time, and the call-in information for the webinars to answer your credit repair, business credit, or business funding needs, as well as your real estate related questions. Thank you guys again for watching, and subscribe.